Why the crypto winter may not be as bad as it seems. The crypto bear market has arrived, and all-time highs appear to be fading sweet dreams. Bitcoin, BTC, is down more than 70% from its highs, Ethereum, ETH, is down nearly 80%, and virtually every other coin is down. The DeFi, decentralized finance, space has also taken a beating as a result of the Luna UST meltdown and Celsius network withdrawal issues, among other things. Worse, it's not even close to being over. Inflationary pressures will force the Federal Reserve to raise interest rates even further crashing the market. Among other things, the total value locked, TVL, in DeFi protocols has declined from an all-time high of $254 billion in early December 2021 to around $90 billion today. On the surface, the situation appears disastrous, but that is far from the whole picture. Despite all of the expected market volatility, there is still reason to be optimistic. In fact, further investigation reveals that the decrease in TVL is primarily due to a drop in market prices, rather than users abandoning the protocols. On a good day, for example, around 500,000 people use the Ethereum network on a daily basis, which is roughly the same number as exactly 1 year ago. Despite the market turmoil, DeFi projects continue to attract attention. Furthermore, the bear market and impending crypto winter are not deterring DeFi development. Major updates are planned for projects such as ETH, Polkadot, DOT, Cardano, ADA, Avalanche, AVAX, and many more in the coming months and years, proving that DeFi is here to stay. The industry has learned a lot, and people are realizing that market volatility is unavoidable, but it is not the end of crypto. The cryptocurrency crash of today and the bear market of 2018 are not the same thing. Although it is nearly impossible to predict a crash, all markets move in cycles. During a bull market, speculation leads to overpriced projects and misinvestments, which, eventually, leads to a decline. The most recent market cycle has been dubbed the era of initial coin offerings, ICOs. Crypto experienced its first significant market expansion. New projects and existing startups seized the opportunity and began utilizing digital assets as a funding mechanism, frequently without providing any real underlying value. The industry was extremely uncertain, with far too many bad ICOs. After Bitcoin reached an all-time high of $20,000 in December 2017, the market crashed. Fear quickly replaced euphoria. Many ICOs failed, and over-leveraged retail investors suffered as a result. Furthermore, the fear of impending regulations created the perfect storm for a massive market crash, with many doubting the industry's ability to recover. A look at the crypto space today, however, tells a different story. To begin with, the blockchain industry has evolved from a few functional networks to a network of interconnected ecosystems with millions of daily users. DeFi, non-fungible tokens, NFTs, and iGaming are multi-billion-dollar industries that have plenty of dry powder to get through the bear market. Furthermore, the market has shifted from being primarily driven by retail investors to large institutions and corporations such as Grayscale and MicroStrategy. Crypto sponsorships are appearing in nearly every major sport, and Web 3.0 products are becoming increasingly commercialized. Even governments are beginning to embrace blockchain technology. With current inflation, other countries may follow El Salvador's lead and make Bitcoin legal tender. It is safe to say that DeFi is no longer a niche topic, but rather a major driving force in the global economy. Its ability to change the world is no longer a secret, and many people recognize it. However, As important as the blockchain industry has grown, challenges remain. The demise of Terra and USD was a crushing blow to DeFi. Following that, most stablecoins, including Tether, struggled to keep their peg. Trust in stablecoin algorithms has inevitably declined, which may pose a significant problem for smart money entering the market. To stabilize the situation, new security solutions and regulations are unquestionably required. The macroeconomic outlook is also bleak, with higher inflation, rate hikes, and market downturns becoming more likely. Crypto is facing numerous challenges, but we've been here before. Bear markets are never easy to navigate. However, due to increased crypto adoption and industry consolidation, the market may not suffer as much as it did in 2018. Remember, market cycles are normal, and the inevitable crash follows the euphoria. Only projects with real underlying value and use cases survive in a bear market, and DeFi has plenty.